Hello folks, this is Larry Strelacki from Assured Concepts Group with our May 2016 Educational Economic Update. In this video, I'll talk about some of the economic events that influenced markets in the past month and give you some insight into what they could mean for you as an investor. The Federal Reserve Open Market Committee met in late April and, unsurprisingly, decided to leave interest rates where they are. Though the Fed still expects to raise rates this year, central bankers clearly intend to move very carefully. Though the Federal Reserve seems ready to raise interest rates as soon as economic growth picks up, the latest economic data doesn't support this narrative. Before the meeting, many investors were expecting a June rate hike. However, the Fed's cautious tone and the November election make it more likely that the next rate hike won't come until December. Investors also got to look at fresh economic growth numbers. The advanced estimate of first quarter gross domestic product showed that economic growth stumbled, increasing just 0.5% in the first 3 months of the year. That's a sharp decrease from the 1.4% the economy grew in the last quarter of 2015. The weak growth is concerning, but it's not something economists are panicking over. Slower spending by consumers and the government, as well as cutbacks to business investing, which stem largely from plunging crude oil prices, all contributed to the dismal growth last quarter. The good news is that some economists don't expect the weakness to stay with us for the rest of 2016. Now, though past performance can't predict the future, weak first quarters were followed by stronger quarters in several of the last few years. Energy prices also look to be stabilizing, which will hopefully spur business investment, and consumer spending is expected to come back this quarter. First quarter earnings season kicked off in April, and the low expectations investors had about performance paid off because they left room for surprises. Out of the 209 S&P 500 companies reporting so far, earnings were down 5.5% from the first quarter of 2015, and revenues were down 1.6%. However, over 75% of those firms were able to beat expectations, showing that management did a good job of preparing the market. Even when the earnings picture is weak, better than expected results can give individual stocks a pop. Overall, we see that U.S. firms really struggled with growth in the first quarter. The energy sector was a serious drag on the overall S&P 500. The sector's earnings are down 114.5% over the same period last year. The technology sector also generally underperformed as big names like Apple, Google, and Microsoft failed to live up to expectations built on previous quarters. To sum it all up, though the economy continues to chug along, growth was hard to come by for U.S. firms in the first quarter, and many challenges still exist. Slow economic growth also complicates things for the Federal Reserve, and we're not likely to see a rate increase anytime soon. However, it looks like we have some brighter growth ahead of us in the second quarter. We'll know more in the weeks ahead. That's it for the May Educational Economic Update. As always, if you have any questions or concerns about what I've discussed, please give our office a call at 847-426-1077. And please remember that nothing I talk about here is a recommendation. If you would like to discuss your personal financial situation, please give me a call. I'd be happy to talk to you. Once again, this is Larry Strelacki with Assured Concepts Group, signing off for the month of May 2016.
If you would like to discuss your portfolio or personal financial needs, please contact us at 847-426-1077. Nothing stated in this presentation should be considered an offer of a securities product nor an investment strategy. The advisors of Assured Concepts Group offer securities and investment advisory services through FSIC. FSIC is a member of FINRA and SIPC.